Hello, everybody, and welcome to today's episode of Crypto. Oh my God, I have some fun things incorporating macro all the way back to crypto. Let's get right into it. So a lot of the industry has flown across the world, assuming we're coming from the West, over to Dubai for Token 2049. I'm not there because last year I basically got traumatized. It's not really their fault. They had a once-in-a-lifetime epic storm of insane proportions. I spent over 25 hours on a plane, and I just decided not to do it again. However, there should be some fun announcements coming out this week. It is a very primed week for people to do reveals. So I'll keep you up to date how that goes over time. Now, to get into today's topic, I want to start with some of the macro that we're seeing. Obviously, everything globally is tied into the macroeconomic viewpoint, the tariffs, the trade wars, all of it is coming together. So any sort of asset class, crypto being one of them, is going to be tied to this news cycle. Now, to start with, we are beginning to see the impacts take shape, which will be in the form of a lot of pain, especially to the marketplaces, the things we buy, the pricing of everything that we're used to, and the end of Temu, which I'm not really going to cry about. Now, one of the things I saw this morning that embodies this reality is the Port of Seattle, waiting for the ships to come in. So Seattle, obviously a very important shipping port, being very close to Asia, is seeing 0 ships this week on Monday. That means that there is nothing to unload and that the product is now being directed away from the United States. And the impact on this is going to be massive. We're already seeing small businesses realize that the struggle is real. This was a really interesting takeaway. Swaddle Designs, a Seattle-based baby clothes company, relies heavily on imports. They paused container shipment due to this month's realization that the 145% tariff would add roughly $300,000 to the shipment's original $200,000 cost. I mean, that's me. I think this is very indicative of what small businesses are going to have to face moving forward. Obviously, this is a killer. This will impact the markets. This will impact the velocity of money, how money is being spent, and should impact the buyers of our beloved digital assets. And of course, a second order effect of this is going to be the truckers. They are going to have a direct and very immediate effect. So anyone that's in the shipping industry that took out a loan or is in any way leveraged on the side of debt is going to be in significant trouble. We are going to see a grinding of the economy on the supply side. Now, the idea is that these tariffs make up for a lot of the tax losses and future cuts, but if there's really no goods to be purchased, we don't yet know how these are going to play out. So things are about to get very expensive. It does seem like the 1st of May is sort of the timeline to kick off the impact. But again, with no assets coming into the ports and nothing to truck, we begin the domino rally of what the next phase of this tariff show is going to look like. I'm seeing it all over the place. The baby tax, Trump tariffs, sending baby gear price soaring. So I'm personally of that age. I'm seeing a lot of babies come out. And, this is just a ripple effect that will happen throughout the economy. It will impact food. It will impact a large variety of things. Basically, we're looking at a total supply chain disruption. And while many people like big tech are beginning to pivot to India, this is all going to be a very slow process that should be damaging to markets overall. Now, Joe Weisenthal of The Stalwart, who is an excellent economist and has a knack for putting these stories into a more digestible way, brings up this note: pretty horrible Dallas Fed manufacturing survey. Levels hit the lowest since May 2020. So we're starting to see the supply chain disruptions harken back to the COVID pandemic. I mean, this is pretty big. That pandemic was a once in a lifetime event, and I guess we get to relive it again because that's just the way history works these days. Some really good information here if you want to dive into some of the numbers, but you can see at the bottom he's highlighted general business activity down 35.8%. So we are beginning to see the ripple effects. And of course, Treasury Secretary Scott Bessent has been rampant on the appearances on television. He is speaking as loud and as prominently as possible, saying that this is all part of a great monetary structural reset in what some people are calling the Mar-a-Lago Accords, which is that Bessent, along with the admin, if they're on the same page, and that is up to debate, is saying that they want to recompose how the U.S. deals in trade globally so that we end up making more money and this trade imbalance finds a greater balance. Now, Bessent's been everywhere really talking about the grand scheme and trying to emphasize the message of short-term pain for long-term gain. But of course, in this very interview, he is asked, what do you think about empty supply shelves in stores? And his response is, well, our sellers are smart. They've probably pre-ordered and I mean, this just does not bode well for small businesses that are maybe not Walmart level, maybe not Costco level, and haven't really positioned themselves for the impact of this. But we can see through his Twitter account that he is hitting the news channels pretty hard, talking about conversations with trading partners, the Republic of Korea, India, basically trying to portend a positive spin on all of this news. And of course, with China being the primary opponent in this trade war, he is going out to say numerous times that China is actually coming to the table, that calls are being made. Of course, China themselves has come out very quickly to say none of this is happening, and they're taking big moves to impact the US and the US economy. And this can be seen with China actually not taking custody of their order of 50 planes from Boeing. I believe Boeing needs to sell about half of those to break even on their costs, so this is a pretty big overhang for what is one of the biggest industry providers in the US. Now, how does all of this impact crypto? Of course, you could look at this and say, hey, retail is in a really shitty position. They're not going to have a lot of liquidity, a lot of cash on hand. And this is going to impact their ability to come in and to buy our assets. But what we are seeing, and this is kind of going into the idea of a decoupling, is it really happening, is a larger macro position. We might not be expecting retail to be the next great buyer of digital assets, but institutions and larger players are beginning to look at blockchain in a new light. Granted, Bitcoin has been around for about 15 years now. It's not going anywhere, and people are starting to capitulate to the monetary value of Bitcoin as a store of value, right? A digital gold. A narrative that I think is actually being shot in the foot a little bit by this administration as people do flee towards gold as a safe haven asset. However, the more the institutions get on board with Bitcoin and the more purchasing power flows through the ETFs, and let's not mitigate the serious impact of stablecoins. Stablecoin adoption is ballooning. The traditional finance industry is realizing that blockchain itself, assets price regardless, is an extremely powerful tool for digitizing the financial ecosystem. So stablecoin growth, something I've covered many times, is a massive indicator of the beginning of the blockchain era. I could argue that we've been saying that we're so early for so long, and it's actually looking very accurate. The turning and the great adoption is only beginning. So if you're in now, you are indeed very early. Now, when we come back to crypto, we can see that even though the economy is tanking and there's this concern and this fear perpetuating everybody, we are seeing a flight to crypto. There are some positive impacts. And again, is this a decoupling? Like, I couldn't tell you. We're not really there yet. We don't have the information to support that, but we can see an interest in cryptocurrencies and digital assets picking up steam. For example, here we have the Cointelegraph, and sure, it's talking about a Bitcoin discount to spot buying. I'm less interested in that, but we can see that the buying soars to $3 billion in 1 week. This is a very positive, reflexive action on everything going on with the tariffs. People are beginning to move into Bitcoin as an asset. These are larger players. I'm not opposed to it. This means that we lay the groundwork for better custody, for better infrastructure, and of course, with everything the SEC is doing, we lay the foundations for actually building real businesses, something I have said over and over again and will continue to pound the pavement on. Of course, as we continue down this road, we're seeing this post from Tyler Did It, which shows that the Janover stock is up 65% on the week. Now, Janover is a Solana pantomime of the MicroStrategy playbook. So they bought this business, publicly traded, and they are basically going to use it to put Solana onto their balance sheet. The impact of this is bullish on both Solana's underlying price. You have major buy-side pressure now, as well as just the broader adoption. What this is doing is allowing Solana to enter into the bags of people that require something like a publicly traded company. Of course, Janover is operating as a validator, so they will be earning the rewards, which is necessary if you want to avoid inflation. But just the appetite for this is a hint, is a signal of this larger adoption schema that's happening and pervading the world. This all becomes more impactful as people really look at the USD with a little bit more skepticism than they did as a safe haven asset and are looking for alternatives. If you remember, China and Russia have settled oil prices in Bitcoin. So the cracks are showing in the wall of traditional finance, of the old ways, and we all know that the digital world is an unstoppable machine. Another factor I like to take into account is looking at the pudgy penguin price on their meme coin, Pengu. It's been absolutely skyrocketing over the last 2 weeks. I made a joke post this morning on X that, the greatest fund of the next cycle actually longed Pengu about 2 weeks ago, right? Mid-April. Because, look at this. When we take it back to the maximum, yeah, sure, it's down, but it's climbing up something fierce. And the pudgy penguin community is very retail facing, is very child friendly, family friendly. Everyone can get on board, and the abstract chain itself is extremely retail focused. So they will build more apps that probably take advantage of Pengu, and it's hard to tell. But coming back to just 2 weeks, we have this asset up 144%. So there is buying appetite coming back. Things are waking up. And of course, we've got Byzantine General, just a very large trading account, many followers, lots of cogent advice around the markets and the liquidity profiles. But he says, damn, Pengu almost broke all resistance levels in one go. Crazy move. I expect some consolidation. I agree. When you see these moves, you generally have some sort of response, but you got to give it to the Penguins. It's one of the strongest communities that has also got incredible normie appeal. Man, can't stress this. This is very exciting. So now we're beginning to see two different elements of the cryptocurrency ecosystem beginning to pick up steam again. The institutional adoption of Bitcoin, the ETFs, and things like MicroStrategy, and of course Janover picking up steam. Now, last but not least, we go to the Pudgy Penguin sales bot. This is really just a bot that posts about Pudgy Penguin sales. Before the Pengu airdrop, these guys were going for about 20 ETH. Immediately following that, there was no more airdrop and we had a bit of a collapse in the price. They've established a floor pretty firmly for the past few months at around 10 ETH. And recently they've started to pick up. We're seeing 11.37 sales. We're seeing 11.5. We're seeing 11.5. Again, these are $20,000 purchases. They're happening all the time. And quite frankly, these penguins here are what we would call clean boys. They're very nice. They've got a lot of fancy traits. Basically, as art, they have some of the elements that people like to look at. So again, I've just been flowing through, and there's just multiple purchases pushing close to 12 ETH. So we are seeing the accrual in Pengu going up, the purchasing of the NFTs. NFTs began to have a comeback around Christmas. So what their long-term staying capability is, I'm not sure. But again, these are a fairly illiquid asset, and the fact that they're moving in an upward trend is a bullish signal. Goes along with the meme coins, and it is something that I take very seriously when looking at markets. Some of the larger meme coins on Solana are showing an improved pump as of late. This is very indicative to me of the retail buying appetite. This is still the easiest way to accrue wealth, similar to how we did back in the 2017 ICO era. All of the tech companies, all of the infrastructure, generally overvalued, and they're going to have a tough time finding the product market fit that really supports their valuation. Now, meme coins are generally distributed en masse, 100% of the supply. You can get in early, and if they do ride, they give you a really nice return. The counter is that they are unsubstantiated. Now, Pengu has this amazing community, so we could say it's substantiated by the efforts of Luca Netz, their founder, and everything going on in the Pudgy Penguins community, things that we're seeing sold at Walmart and beyond. Of course, are people going to be spending as much money buying these products? Really hard to see as the impacts of the tariffs take off. So all of this is to say that as we enter this new sort of chaotic zone and we see the long tail elements of the tariffs playing out, we are probably going to see recessionary features begin to play out, like lower stock on shelving, businesses going bankrupt. Anyone that's really reliant on the supply chain marching to the beat of the drum that it has been is going to see massive disruption. Now, when the real world gets into a bit of a clusterfuck like we saw in COVID, there is the digital world to take over. There are these alternative assets that anyone can pick up a cell phone and buy. So if you're looking to de-risk, if you have some dollars and you're a little concerned about what's going on, the digital sphere is very easy to access, and purchasing cryptocurrencies is by far easier than doing the KYC process, full step function of buying securities. That being said, I'm not entirely clear how this is going to play out, but I am beginning to see the inkling of the decoupling of people seeking safety in the digital asset land. It's very exciting. I will continue to follow this trend, keep you very well posted on it. It's something that I am tracking closely, and hopefully we do get a lot of very exciting output from the Dubai conference as well. So as always, stay safe out there, good luck, and I will see you tomorrow.